Hi there, eToro. It is Monday the 17th of January, and it is time to see what moved the markets last week. Let's take a look. Last week, the third week of Jan when it comes to the market, was volatile. As you can obviously tell by the giant, we're looking at the NASDAQ here, by the way, in candles. So giant red, giant green candles, lots of volatility, but ultimately the NASDAQ ended the week more or less where it started the week. The yellow line is the S&P 500, and that tells a similar story. If we look back over the month, so this is a heat map looking back over the S&P 500 for the one month view, you can see that the mega caps have really taken the brunt of the selling when it comes to the S&P 500. And this is after them being the leaders of that index and the NASDAQ 100 to some degree for a long, long time. So those stocks that have done the best through the past, let's say, quarter prior to this year, have taken something of a beating. So Nvidia is another one that ran up massively last year. Strangely, when it comes to US stocks, the IWM, the Russell 2000, behaved very similarly to the indexes that contain the larger companies, and it ended the week more or less where it started. And so we're seeing something of a shift in January, at least so far, in that the US was leading in terms of index gains through most of last year, while the indexes from many other countries have lagged through 2021. But it looks as though things have changed a little bit now. Obviously, it's still early in the year, but I wonder if money's going to start pivoting into other geographies through this year, because the US is quite hot and they're tightening their economic policy quite quickly. Other large items that moved the market last week, well, CPI came in, inflation numbers came in high, but they were expected to be at the levels that they came in at. So I don't think they affected the markets too much. They just confirmed more of what we already knew. However, on Friday, we saw retail sales come in a lot lower than expected, and this hit a lot of retail and e-commerce names. So I think, if I remember correctly, Nike is one of those companies that is quite a lot down on the back of this news. Other areas of the economy and the stock market that seem to be moving are travel and leisure and hospitality stocks. It looks as though people are becoming a lot more optimistic when it comes to pandemics and coronavirus, and have started buying into these types of stocks. So you might say this is only up 1.5% for the month, but a lot of the other major US indexes are down at least a few percent for the month. So this is a decent outperformance this early in the year. I expect this trend to continue unless something insane happens, like a new version of coronavirus is found that turns people into zombies. But other than that, we have so many tools at our disposal now, and they're working. One of the areas that has been doing fairly well through this year, whilst the US indexes have been doing very badly, is the UK 100, the FTSE 100. So I've mentioned this before, but that index is made up of very large businesses, typically global companies, the largest 100 companies within the UK economy. And this index has been buoyed by oil companies, BP, for example, which has done very well off the back of oil prices, but also BP in particular, I think, is undervalued. So you can see that UK 100 stocks have done very well. Banking stocks in the UK have also been doing pretty well because interest rates are going to be going up through this year, and banks do well when interest rates go up. But you can also tell by the little flags to the left of the particular stock, so this is my portfolio, that there are a number of UK winners within the past week or so. As I've mentioned before, UK stocks are incredibly cheap when compared to their equivalents in other geographies, and particularly in the US. So at some point, the market is going to realize this and flood back into these stocks. We're also at the beginning of earnings, and on Friday we saw a number of US banks report their earnings. US banks typically start the earnings season in earnest. There are a few early reports that are posted, but banks are the beginning of the bulk of the earnings reports that come through. The results were mixed. Some were good, some were bad, but they haven't sent the market flying in one direction or the other. After the beatdown that the indexes have been taking over the past, let's say, 1.5 quarters, all eyes are going to be on earnings. There are those that are very pessimistic and some that are optimistic, and everywhere in between. But I think that the earnings results that we see over the next few weeks are going to set the direction probably for the next quarter or two at least. And finally, there's a lot going on in China at the moment. I'll come to some of it a little bit later in the video, but there are things that are weighing on the economy. There's a slowdown going on in terms of GDP. Their policy with coronavirus really seems to not be working at the moment. Of course, there's the ongoing fallout that started with Evergrande but is spreading through the economy. And this is affecting Chinese stocks, but it's not affecting the entire Chinese market, actually. Some Chinese equities are beginning to do quite well. So what are the root causes between the market movements over the last week? Well, it's much of the same, really. So the accelerated plans that the US Fed mentioned in terms of increasing US interest rates, as well as withdrawing support for the economy, effectively executing quantitative tightening, are still working its way through the market. This is quite evident in the US 10-year Treasury yields. So they spiked 2 weeks ago and took a little bit of a rest through the last week, although I suspect that they will continue upwards through this year. As I mentioned before, we're also now at the beginning of earnings season, and many investors are nervous about what we're going to get out of earnings season, hopeful but nervous. And so depending on the type of investor, this is going to drive certain types of activity. If you believe that everything's going to be okay through this year, then you might buy into downtrodden stocks. If you think earnings are going to be falling off a cliff for the rest of the year, then you're likely to look more towards safe havens. And like I mentioned before, the world seems to be turning a bit more optimistic about coronavirus. So there are various ways to see this. There are headlines, of course, but what's quite interesting is that if you search for the term endemic, the number of appearances in this term on Google Trends has been on the increase quite dramatically through the past month, 2 months. Now, this will be good for certain areas of the stock market, the economy, but also as a world, it's something that I think we should be celebrating. So what does this all mean for us, the investors? Well, a huge portion, this is not super recent. I think this is from, the 11th of Jan, but it's still largely relevant. A very large number of stocks in the NASDAQ 100 are enormously down and have been dropping since the middle of last year. A few companies have been carrying the larger indices within the US, the S&P 500 and the NASDAQ 100. But now we're seeing that even those companies, those large companies, have been capitulating and selling off. The reason I think that this is good news is that because in the same way that you want breadth in your rally, if you have breadth in your sell-off, then the entire market is reset and ready for the next leg up. And yes, I still think that there is more to run in this bull market through at least 2022. So given that the selling spread through January and there was no stone unturned, just about, I feel as though that we are approaching the end of the selling, although it depends to some degree on what happens with earnings. If they're terrible, the market might continue dropping. If they're fantastic, we could see a sharp, hard rally. So what's going on this week? Well, US stock markets are closed today in observance of Martin Luther King Jr. Day, so they'll reopen tomorrow. So things are going to be a little bit quiet. As I mentioned before, earnings kicked off in earnest on Friday, really, with some of the big banks, and that will continue through this week. So you can see that there'll be lots of banks reporting through the coming days, but also there are other types of companies, Procter & Gamble, ASML, Netflix, etc. So it's going to be a big week for earnings. And that means I'm going to be staying up late many nights picking through the various earning reports to try to get hints of where the market is going over the next few months. And earlier in the video, I mentioned that China has a number of challenges. The country posted GDP growth today. It was expected to be slower than we've seen in recent history, and that came very, very true. Now, this is no major surprise, obviously to China in particular, and we have seen through, I would say, the past 3 weeks, maybe a month, China loosen its economic policy in various ways in order to stoke the fires of growth a little bit more. And today they've implemented yet another measure. So they've cut the lending rate for the first time in a year and a half. And collectively, these easing measures will eventually translate into additional growth within the economy. I suspect it means that the lows that we saw within Chinese indexes a few weeks ago, when other easing measures were initially announced, will be the bottom that we're going to see for a long, long time. Chinese equities are very cheap. Investors have been incredibly fearful when it comes to investing in that market, but I think that the temptation is probably going to be a little bit too high now that cheap money is available once again within the Chinese economy. All right, that's it for this week. I will be doing my copier update video on, I think, Wednesday of this week. If you're not able to make it, I will post the recording on my YouTube channel or just on eToro. All right, thanks very much. Have a great week. Goodbye.